All right, welcome everyone to today's live trade session for TPO. This month actually is kind of a bizarre month, so we got started a little weird this morning or this afternoon. So par for the course for this month and par for the course for 2020. We'll just chalk it up to a 2020 error problem with the screen this morning. So um, in today's trade sessions, we are going to be going over basically a lot of different strategies, kind of like we did the last one, and it's going to be something that we do for the rest of the month. We're going to cover a broad scope of things because this month is so weird with ex-dividend being this week, Christmas being the following week, New Year's being the following week after that. Things aren't going to really get back to normal until the first of the year. So we're looking at a whole bunch of different stuff, giving you a bunch of different ideas throughout the process. The screenshot today, or the photo of the week, that is actually of a Colorado creek, one of my favorites that I've run across in Colorado. The water is just crystal clear. The deep part, which is in the green, is about 6 feet, and it's flowing, but it is just a gorgeous, gorgeous creek. So anyway, that's it's kind of an abstract photo, if you will, if you like abstract. So it's a little bit different. All right, let's go ahead and get going for today. Before we start the material, just want to remind everybody that in the very near future, like next month, you'll be able to buy trade partner stock. It'll come in at about $10 shares where it's looking at right now, and you can buy one or you can buy 1,000. Doesn't matter. So that's something that more information will be coming in the near future. The second announcement is that I will be doing the profit stacking risk-free calendar spreads on Thursday at 11 a.m. Eastern. So if you all have been looking forward to that, make sure you get registered to attend that. Following that, obviously, we'll do our normal TPO call here on um, Thursday as well. All right, for those that are new on the call, I do want to welcome you to today's call. I also want to warn you that I don't explain everything about these trades on the call, and the reason is because there's just a lot to go over. And varying degrees of market conditions are going to change things ever so slightly. These calls are meant to be attended in large groups at a time. So you want to come in, you want to go at least for about 3 months, and you'll start to get a really good feel for these trades and what we're trying to do. And there are several different strategies based on different market conditions and the opportunities that exist. And as you know, if you've been attending since we started these, you know I may introduce something new, almost on a continual basis, just to give you an idea. I also do want to mention that the purpose of me showing you everything is not necessarily for you to consistently trade everything that I show you. It's impossible to do that. I can't do it, and there's just too many. And so the purpose of these is so that you will find your niche, if you will, on what you really prefer, what fits your personality best, your risk tolerance level, your goals, et cetera, and then become really, really good at it. Okay. I also want to caution you that if you're new, that these trades are fantastic, but you need to make sure that you follow directions. You need to make sure that you're not reckless with how you put them together, and you need to make sure that you start small. And you start small because you have the potential to grow as you experience profits, and that growth can be very quick. If you do pretty well and average about $100 a week over the first 6 months, you're talking about growing your account by almost $30,000. And in fact, if you do well, if at any point you get to where you're doing about $100 a week on average, that's the rate at which you can grow. And if you continue to do that for 5 years, you're talking about astronomical growth. There's no stock trade or stock strategy that's going to get you this kind of growth for the risk. In fact, it's not even close. Risk-adjusted returns are unequaled. When you look at the TPO strategies, most of them, and applying the compounding. There are a few that aren't going to grow that fast, and we're going to be talking about a few of those today, and that's mainly in the option insanity strategy. But the option insanity strategy has a really high probability, so it's not going to grow as fast with regard to compounding, but it will grow fairly quickly. All right, so the first thing that we began doing, and I did this at the beginning of the month. We went over a trade, and then I put one on that was further out. And the reason I did that is to give us the ability to watch these on a weekly basis. Since it's going to be kind of a weird month, put some trades on and start to watch them. And unfortunately, this is one of the issues. If you're waiting for the spread patterns to be released, we're going to release them, but this is an issue that we're having, is when the computer, if the computer goes to sleep, you lose the pattern page. And and what happened when I hit zoom here, let me show you how many I had ready for today. You can see here, maybe, and it may or may not be showing. Anyway, I had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 windows prepared for today, and all of them, I lost all of them when I turned the Zoom thing on. So we're going to have to go through this, and maybe this is just a good exercise for you guys to go through with regard to the, whoops, there we go. And with regard to putting together the spread patterns. All right, so we're going to put together the spread patterns here. Let's see, 1 second, and we'll click new. All right. So here's the trade. Which one were we in? We were in 1231 to 1.4. And again, as you're going to see, you can do this almost at any time. You can do it far out. The issue is obviously with this one, it's the margin hedge. So we're going to take a look at 360 versus 370, and we're going to see where these are. And I'll bring that back in here. So I put the spread together. Another issue is that if I make any changes to this right here, right now, it won't show up on the spread. So that's, well, except for that one. So that's the other issue that they're working on, but they are scheduled to release this over this weekend. So I started with 360, 370, and it's a buy 1, sell 5. Okay, that's the option insanity trade on this one. I'll bring this the P&L chart here back into play here in 1 second. So I'll go 361. Whoops, and that'll be the beginning. Then I'll go all the way up to 381, and then I'll do it in increments in 1. And so this is going to create all the patterns for this. It'll start at 361. It'll be same expiration, same strike distance. So start at 361 and then go 371, then 362, 372, et cetera, all the way through the increments. And so the start strike is the lowest strike, and then the end strike would be also the lowest strike. And we just hit generate, and lo and behold, here are all the spreads that are generated. So and we're going to be adding a lot to this. By the way, I've got just a ton of stuff that we're going to be doing with this one particular feature that's just going to be super, super, super helpful for traders to understand what they're doing with regard to these spreads. All right, so we are in the 373s, 383s. Is that what I said we were in? I believe it is. So, yep, all right. So we are in this one from a credit of 93 cents, okay? 93 cents. And you can see here, anything below 373 is going to give me basically 93 cent or $93 profit. And we're trading well below this. And then if we start to get into this major profit bubble here, then that profit begins to increase, topping out at maybe as much as 500, probably be a little bit more than 500 at this point, if it were to go up there on the last day. Now, the great thing about this is that we don't have to hold on to these until the last day. As you can see right here, this thing is trading at a, let me do this again. This thing is trading at a debit of basically zero, which means I'm making $93. And we're a long way away from expiration, about 2 weeks, a little more than 2 weeks away from expiration on this. Right. So here's the question. Do you hold on to it? Do you hold on to it? Do you take profits? Well, we could hold on to it, no question about it. And if the market moves up, we'll add to our profit potential. But you can also go ahead and basically exit maybe one or two shorts if you want, and then replace them if the market moves up. As a general rule, I'm not a huge fan of doing that. We're trading at 360. What did I say? 367 right before the call. And take a look at where this break-even level is. Okay, the long is 383, or excuse me, 373. Right, the shorts are at 383. Here's where the shorts are. That puts the break even at almost 385. It'll probably be really close to 385 for a break even. And in the meantime, we've got all this time that we can go into and through the profit zone. So really, I'm not risking. I want to be careful with what I say here and how I say it, but in reality, I'm not risking anything by holding on. Yes, is there risk on the trade? Absolutely, because the trade could, in fact, go beyond 385. But the probability of it going beyond 385 before I have many opportunities to exit at a significant profit before that point is just super high, like super high. So it's almost not even worth mentioning. If this were the other direction, that's a whole nother story because the market can crash a whole lot faster than it can go up. Now, I want to be careful because I have, and we've seen this happen on this call where one day the market is up 10, 11 points because of some bizarre, unexpected economic news report. And so it can jump. But right now we're almost 20 points away. And so again, the probability is just super high. And remember, I'm sitting on basically my profit, my 93-cent profit right now. So let's take a look at something real quick. All right. What has to happen for me to start losing money on this trade right now? What has to happen in the market? Okay, this is where we're at. We're at 373. We're in the 373s, 383s. We're in from a credit of 93, and it's trading at a debit. Let's just scroll here, and we get down to right here, 367 to 377. This trade may turn into an open position loss right now, although it's unlikely. Right now, if the market goes up to around the where the long strike is at the money, which would be 373. Okay, so that is a open position loss. Now, I say probably going to be more than this, because if the market moves up to 373 right now, we're going to see some volatility drop out of these options. And so it's probably going to be a little bit better price than this. It might be, 93 cents, 90 cents, 80 cents, somewhere around there. And we'll be looking at a break-even trade. If it were to continue moving higher, and I mean like today, then you're looking at, if it goes to 374, that would be equivalent to this one. Because right now, this one is in the money by 1 point. The long is in the money by 1 point, right? We're trading at about 367, or at least we were right before the call. Not quite sure where we are trading now. Maybe I can take a look at that real quick just to make sure that I'm giving you accurate information. Nope. Chrome completely on this last, whoops. There it goes again. Hang on, guys. All right. Maybe I will be able to pull something up. And it looks like right now SPY is trading at 366.71. All right. So a little bit in the money. It would be $1.62. A little bit more in the money. That's be 375. This would be equivalent to the market going to 375 with my current position. And so it's not absolutely impossible. But again, with the market, if the market moves up, we're going to see the value of these calls, these short calls, drop significantly. All right, but let's take a look at, and lo and behold, of course, I lost that spread pattern, so of course I didn't save them. Nonetheless, let's take a look at sequentially, week by week. This is how you know what to expect, is by making these comparisons. And that's really what I wanted to focus on today, and had it all laid out and prepared, and lo and behold, a lot of work for nothing. But let's take a look at the 1218s and the 1221s. Let's see where all of those are at. Oh, and before we do that, I want to show you something here. Okay, let's go all the way to 360. This is 360, 370. So the shorts are still out of the money. And this is, again, 1231.14, 1231.14. So this is about 3 weeks out. And the shorts are still out of the money, but look at this credit on this thing. $825. That's $825. You are guaranteed to make $825 at 370 or below. Guaranteed. And actually it'll be a lot more than that. Probably about $200 or $300, $400, $500 more than that, depending on where you're at below 370. You'll be making that probably anywhere below 374. Okay. So this one is not a bad trade from the standpoint of the fact that you can bring in a lot of credit. You're just a lot closer to where the risk is, which is going to be about 370. You're looking probably at a break even around 375, 376 on this particular trade. But we'll get to that here in a second. So I want you to notice that before we do the more recent ones. So I'm going to do this. We'll go with a 360. I'm going to buy the 360s, and we're going to sell the 370s. And I know a lot of you are not able to do this just yet, but you'll be able to once you start growing your account with maybe some of the other trades, even if it's only on a one lot basis. So this would be a one lot. This is one spread, a 1 to 5 spread. Okay. This is the 1214, 1216. That's, whoops, that should be 1218 and 1221. All right, there we go. So 1218, 1221, that is this Friday. And of course, this week is a little bit different because it is ex-dividend, but nonetheless, I want you to notice something here. This is 360, 370. In 2 weeks, if we are trading about the same, that spread, this $825 credit spread, is going to go to a debit. So in 2 weeks, you're talking about the Monday before 1231. If the market's trading relatively the same, you're going to see that trade that was looking at $825 credit at about an $87 debit. That's a $900 gain on that thing. So that's I'd be very careful in doing this one. In the money, or not in the money, but where it's kind of like in the middle of the profit zone. Just because if there is a spike, you're talking about a lot of risk, but at the same time, you're also talking about making a lot of money in stagnant markets, or if the market moves down, because your minimum gain, if the market moves down, is $825. All right, so let's move up to the 373, 383. That one that expires this Friday would be at 23-cent debit. And if I'm at 368 and I'm a week before, and this is trading at a 23, 24, 25-cent debit, that means I'm making 100. If I'm in from a credit of 93, I'm making $120, $125, somewhere around there. $115, $120. I'm going to go ahead and get out because the market, the probability of the market moving up into the profit zone is now going to be not very high. If it moves to 373, you might make another $100 on the trade, maybe another $50, $75, $100, somewhere around there, depending on how close to 373 you get, or how much further than 373 you get. At 373, this will be worthless, right? And these will most likely be worthless. And so there's really not a lot of probability. If I'm getting this close and I'm this far out of the money, there's really not a lot of probability that we're going to go and I'm going to see a much bigger profit than what I see right here. All right. So that is, this would be Monday, the 28th, I think, is what day this would be relevant to or correlated to. All right, so let's go that. Oh, it didn't lose all of them. Are you kidding me? So this is, oh, of course, this is the 12/28/21. It didn't lose the one I just created. How you like that? Let's see if it lost this one. Oh, wow, it didn't. So here's the 1/8/111. This is going one week further out. Okay. Now look at the 360, 370s. Almost $1,500 credit. That's pretty huge. $1,500 credit. We'll take a look at one here in a second, but $1,500 credit in 1 week, that might be worth, if the market doesn't go anywhere in about a week, you're going to be looking at about $600 in profits in 1 week. Obviously, you're getting close at 370. You're getting close to that short strike, but you bring in such a big credit that you'll break even might be on this one, maybe 376, 377. We're going to take a look at that here in a second. So let's scoot on out to, I did a 93-cent credit. If you wanted to do this brand new and go out of the money, you can go 375, 385, and you can bring in about 84 cents. I'd put a a limit order on that one at 90 cents. If I wanted to do this brand new, haven't done anything, I would do this one because it is so far out of the money. The break-even point is 387, 388, somewhere around there. And again, the market can absolutely go there, but that's the break-even point. And so it's beyond that. And that's well over 20 points. Break-even point is 20 points away. But we have almost, not quite, but almost a month to go on this one. But as you saw here, so we did 12/18s, and so now I'm going to do 1 week before that. So I'll reset the spreads. I'll change the expirations to 12/24 and 12/28. Keep the same high and low, generate the spreads. And so notice on 360, or excuse me, 12/24, 12/28, in 1 week, you're looking at that particular spread going from 825 credit to 283 credit. So 500, 1 week is worth $500 in this if the market goes nowhere, essentially. But let's scroll up to the 373, 383. And you'll see here that again, that one's at also at a 25-cent debit. So with this particular one, we've still got almost 2 weeks left to go, right? If I get in at 93-cent credit, we've got almost 2 weeks to go. I'm now sitting at $115 profit. The market still could move up this week into my profit zone, which would be 374, 375, 376, 377, 378, somewhere around in there would be the peak of the profit zone. This is actually prime right now. So there's no way I would exit this if this is where we're at with 2 weeks to go, or just under 2 weeks to go, because any move up and we could start to see this profit potential balloon. And there's nothing wrong with that. And again, with the break even so far away at this point, the probability of reaching that is virtually nil. Let's see what has to happen for me to actually realize see an open position loss. And I want you to notice here that the debit, as we look at the other spreads that are below the 373s, 378, right? So here's the one that we're in. Only we're in the 1231.13. The further we go, the bigger the debit, which means the bigger the profit, right? To where we get to the 367, which the market's trading right around 366 right now. And you can see if the market goes immediately up to 373 right now today, I make more money because it's trading at 87, and it'll probably be a little bit more than that. And you can keep going, you can keep going, you keep going. And now we're just now getting into the credit. And where's that at? The credit is at 362, 372. And so if we go to 377 today, and so this would be next week on the current spread that we're in. If we go to 377 next week in the current spread that we're in, we might be getting to a point where we're approaching our credit entry again. And you can see at 361, 371, actually we see a credit here at that point. Okay. So again, the probability, just because of time and the market moving into the profit zone, is just tremendous. That's why I promote these. I know it's not the easiest for everybody to implement, because you have to put on the margin hedge, and that means that you may be risking a little bit more than maybe you are comfortable with risking if the market were to absolutely scream to the upside. But that's something that is certainly based on a personal preference on whether you want to do that. And again, if you can't do it now, pay attention, because this is definitely something. The thing is with our normal trades, like the crazy calendars, even the risk-free calendar spreads that we're going to be talking about, once you start implementing those and you start growing your capital and whatnot, you're only going to be using a fraction of your capital on these risks as you grow. And so you might as well put the capital to use in some way, shape, or fashion or forms. So, once you grow to a certain level, and oh my goodness, I have no clue why my screen keeps blacking out like that, but it is really, really annoying. But once your capital begins to grow, you're going to start to see these opportunities that can just add to your overall balance. And you can use these profits. So if I make $500 in an option insanity trade, I may not be able to compound my option insanity trade very quickly at all, right? Because I have to account for the risk on the trade. As however small with regard to a probability that is, I have to account for it. Period. End of story. And so I may not be able to grow my my option insanity trades very quickly at all, but I can take the profits from that and I can grow my TPO patterns, my normal TPO patterns that are not option insanity, the risk-free calendars, the crazy calendars, the MDOP trades when they come available again. Those are things that can use the profits from this and grow even faster. So it is very, very synergistic to be able to use profits from one strategy in the growth of another. And so that's why I'm spending time on this, even though I know a lot of traders aren't going to be able to do it. It's something that you need to start looking at and preparing for now, no matter where you are at in the game. Okay. All right. Let's take a look at overall risk on these things. Let's say you get into one of these trades. Which one was it? This one. Yeah, 18111. Let's say you get into one of these. You're growing your account. You're willing to take a little more risk. Maybe the market is just shot up, and you're wanting to take advantage of that in a different kind of way. Now you can put on this 360, 370 for 1500, right? And the question is, what's really the risk with that thing? Well, let's take a look at the 1218, 1221, and we're going to reset these, and we're going to assume that the market goes. We're going to start it at 350, and we'll go to 370. All right, so we're going to go way in the money, and we're going to start to see where we get the 1400 credit. Okay, here we are, 352, 362. So if you hold on to this thing and you don't get out, and the market goes to where you're about 5 points in the money on the shorts with about a week to go, not quite, this would be ending this Friday. Look at the credit, $1,400. Okay, so let's again take a look at this. This is a 360, 370. Where is the $1,400 credit on this in a couple of weeks? It is based on 352, 362, 5 points above the short, which puts this at 375. Okay, so 375 is going to be very close. Actually, it's probably going to be closer to 376 will be the break-even level on this trade. So it's one that, you know, if the market is shot up, then you can get into this thing on the momentum to the upside, and you can bring in a huge credit. Okay, so that's kind of where you're looking at. So the market would have to go up 6, 7, maybe 8 points from where it's at before you actually reach the break-even level towards the end of the trade. All right, next on the list, and my, I don't know where my, hang on one second. Boy, talk about screwy. Here we are. All right. Next on the list, here's a starter option insanity opportunity. This is a little bit different. It's a 2 to 1 as opposed to 5 to 1. And this is a credit. It's a credit of 30 cents. And this is 1224, 1228. Okay. So the long is 367. That's basically almost where we're at right now. And again, I put this on last week. I don't remember exactly the day, but the shorts are at 372. Now, I want you to look at the corresponding graph here. Where is the major profit peak on this? It's at 372. That's the middle of the profit zone, 372. So this is this will end on 1224. So less than 2 weeks away. And it has the ability to go all the way up to possibly about 377 before it reaches a break even in 2 weeks. So that's a very reasonable trade to be able to place on. And of course, this was placed on last week. So let's take a look. Maybe it didn't lose it, and I think it did. So we'll put together that spread again. Basically, I'm clicking on the different tabs to see if there are any others that I didn't lose, and it looks like I lost everything else. All right, so we're going to go 1224 and 1228. And we'll go a little bit further here. So 367 buy, 372 sell. Okay. We're going to see where that spread is right now. Got in for a credit of 30. It is now trading at a debit of 31. So market basically gone nowhere over the last week, and this trade's making about $60, and we are below the long strike with the market trading right under, actually just over 366 right now. Okay, so this one, as you, yeah, 366.05 is where that's trading right now. So let's take a look at this one, and we're going to go 359 will be the low strike. We'll go to 379 will be the high end, and by increments of 1, generate the spread. And we're going to see where the 30-cent credit is on this trade. Okay, and the 30-cent credit is at 363, 368. So basically, we have to move up about 5 points now in order for this trade to go back to about a break even. Probably a little bit more than 5 points in order for this trade to go back to a break even. Okay, so what am I doing? I'm comparing black screen. Do y'all see that it goes black, or is it just my screen? Are you kidding me? That's the issue. It doesn't come back. And that really ticks me off. All right, so Most of y'all probably won't have that issue because your screen doesn't go black. I have no clue why my screen is going black with Zoom. Nonetheless, I hate to do this again. I apologize. 24 and 28. There's nothing worse than doing work you've done over again. I can't say nothing worse, but so again, buy 359, sell 364. It's a 2-1. If anything, you're going to know exactly what to do on these spreads, on the spread patterns when we release it. Just be aware that if your screen goes black, you're gonna lose what you did if you don't save it. I probably should save this, but all right. So we said 363, 368. That would be equivalent to the market going up towards the 368 right now, or up towards the short strike. Okay, we're in 367, 372. Right, and so the market would have to go up towards 372, and then this would turn back into about a 30-cent credit. Well, let's take a look at the same spread. You know, I'm gonna create a new window so we can flip back and forth on these. Because I know it's causing us to go take extra time, and I really want to get to the next trade. So we may not spend as much time on this one as originally expected. 1 second. Okay. And maybe not. I'm going to have to open up a brand new window on this one. 1 second here. I love technical difficulties. Just love them. I have no clue why that screen is pure white now. All right, nonetheless, we're going to go with the 2-1 here, and we're going to go out a little bit further. Actually, what were we looking at? We were looking at 1224, 1228. Let's look at the closer one. And that would be 1218, 1221. And it's not quite the same because it is ex-dividend this week. But if they're out of the money, it doesn't matter. I mean, you're fine if it's out of the money. You're not going to be assigned. So we'll go buy the 362, sell the 367s. We'll go 1 to 2, and we'll just 359, 379. See, this is why I like having these prepared, because y'all don't need to be. We don't need to waste time watching me put these things together. Nonetheless, look at where the 30-cent credit is. If we only have 1 week left to go, the market can go to 367 right now, 367, and this one, the 359, 364, is at a 60-cent credit. So that is 2 points beyond the 364, and we have a very small loss, right? So that one, that's one of the reasons why I like this. It gives you a lot of room. You get up to the 367. Which one are we in? We're in the 367, 372s, and look, it's trading at a debit of 88 cents. We're in from a credit of 30, so it's $120. And quite frankly, this still looks really good because we have a nice big profit zone. And at 372, that's the peak profit, right? So again, you go a little bit closer to the money, and you'll notice that the debit is 92 cents here, 97 cents here, 75 cents, et cetera, et cetera. All right. So it looks really good, and it's not even close to expiration. This is this Friday. So it doesn't have to go to expiration to see a decent profit. But let's use this. Let's go out one more to 331.14 and see where we can get. We'll just keep that. See where we can get a 2-1 for 30 cents on this one. How far away can we go? We can go all the way to 369, 374. So that will put the profit zone at 374, the middle of the profit at 374, and the break even about 5 points above that. So that'd be 379. And if the market tanks, we make a credit of 30 cents. Okay. And the biggest credit here, 361, 367. In the middle of the profit zone, you're talking about bringing in a credit of 217, which is not that much more, considering where it's at. Okay, so let's take a look at going one more week out, just to see the price difference, so you can see how to properly compare these, to know what to expect from week to week based on what happens in the market. So now we're doing 1/8, 1/11s, and we'll wait for it to update. There we go. How far away can you go for a 30-cent credit on that? 375, 380. So that puts the profit zone at 380, the peak of the profit zone, and the break even at about 385, maybe even as high as 386 on that. And again, we're trading at 366, right? So these are very, very high probability trades. You're not going to make a lot of money if the market stays down. You're not going to make a lot of money, but you can probably get out of these a lot sooner than 1/8, on 1/8, right? Because we just talked about a 2-1, and this is 1224, 1228. You go 375, 374. Or 375, 380, sorry. And look, it's at a debit. And this one has 2 weeks left to go. So you're not talking about holding on to these things until expiration necessarily. And there's no reason why I wouldn't go ahead and get out of this, because the market's not going to go to 380 by 1224. The probability is that the market's not going to go to 380 by 1224. And so that's the middle of the profit zone on this one. So if I get into this one, 1/8, 1/11 at the 375, 380, I'm probably going to be looking to get out, at a $30, $40 profit. If I've got a couple of weeks to go on it, and then just roll it. Okay. All right, let's get to the next one. 1 second here. And the next one is, if I can find why did my PowerPoint go away? Oh, I moved it out of the way. Let's pull it back in. All right, so we've been talking about the 2-1. Now we're going to move to my cash flow approach to this. The cash flow approach is where you are looking to potentially sell multiple against the single long. Sell multiple sells against the single long. All right, you can do this on a single spread. This is a four-legged spread, obviously. This is a calendar, so this is a diagonal plus 2 calendars. But notice the difference. I'm selling Monday, buying Monday. Selling Monday, buying the next Monday. So it's 1221 short, 1228 long. And the purpose is to either take a profit at the time of this expiration, or if we move up to around 373, I'll sell the 1223 373s, and I'll bring in a lot more premium, and maybe even the 1279, or excuse me, the 1223 379 calls, depending on how much they're worth. So we're going to put this one in to a spread, and I'm going to show you today's. So this is a Monday. So we're going to be able to look at, okay, what if and this is next Monday, by the way. So we'll take a look at this one probably Thursday and kind of see where we're at. I have a sneaking suspicion that we're going to start to make a little bit of a move to the upside, and so this might put this one in a nice position to roll the short from 1221 to 1223, but we're going to take a look at that nonetheless. So I'm going to move this back out of the way so I make sure I put in the right numbers. Again, I had this set up for you guys, but alas. So let me push this out and collapse that. Go 20, and this one is 1221 and 1228 are the dates. All right, let's see. So we're gonna, the short is 373, sell, and 379. We're short 2 379s. This whole spread, by the way, is from a credit of 21 cents. So 379, and then we are long the 378 and 379. And we go buy and buy. All right. Now the credit, or excuse me, the calendar is a 379, and we're in 2 of the calendars. And so this is the trade as it is. 12. Look at that. That's another pain in the rear end, is sometimes the option chains reset. They know about it. It's just not all that high of on their priority list. All right. So let's take a look at this. At the current price is at 18 cents. It was at 20 something cents earlier, a debit. We're in from 21 cent credit. Okay. 21 cent credit. Now I want you to take a look at where the market has to go just to reach the first strike, up to 373. And it's got 1 week to do it. And then the next strike is at 379, and it's got 1 week to do that. Very, very low probability that we're going to go beyond that. So this is a huge, huge probability trade right now. More so because if it goes to 371 or 373 in 1 week, I can bring in more premium on this, right? I can, I'll get out of the 1221s and buy, or excuse me, sell the 1223s. Okay, but let's take a look at all of them, starting at, let's say, 360, and we'll go to 380, so we can see the price difference. And what you're going to see here is that the price difference isn't that great on these, and so this can suffer a pretty big move, and you're not going to see a whole lot of change in the overall price. So take a look here at 360. Again, we're at the first short is at 373. So this is 13 points below, right? 13 points below. So in other words, if the market moved up 13 points from where it is right now, the spread that we got into at a credit of 21 is going to be trading at about a credit of 120-ish. I'm going to be losing $100, and that's if the market moves up 13 points right now. That's why I like these trades, because it gives me multiple opportunities to either get out or swap some of these shorts. All right, so let's keep going. Where do we come in at a 21 cent credit? Along about 366. the first strike being at 366. Remember, our first strike is at 373, and we're trading just over 360. We're just trading under 367 right now. So this is like 1 point in the money. So if the market were to go up to 374 right now, then this trade might show a very close to a break even. Probably making a little bit of money, but very close to a break even. You're given an opportunity at that point to make a decision on what you want to do. But given the fact that that's actually not a bad thing, because of the ability to sell more premium at these levels, it's actually something that I want to happen. All right. So let's take a look now at the current one. And this will be the last thing that we get to, unfortunately, today. So we're going to go 12. Today is 12:14. And then we're going to go 12:21. Oh, 12:14. 12:14. And then the longs would be 12:21. So this is the current trade, only fast forwarding 1 week. That's basically what we're doing. So fast forward to next Monday, and we're in this trade, and it's trading, still below 373. Look at where we're at. We're trading at 36-cent debit, so it's not that much higher. I'll go ahead and generate the spreads, and let's take a look at the one that is in the money by a point. Look, it's trading at a debit of $2 right now. If I wanted to sell the 360s, I could do that, but I could also just go ahead and get out for $2. Okay, so here's where we're at. The short 360, what's the highest long? 366. Okay. Let's fast forward a week and say the market moves up to 380. Okay, right now that spread is trading at a debit of 2. Okay, that spread is trading at a debit of 2, meaning that I'm making $220, $230 on that trade with a week to go. We're past my profit zone. There's no reason to hold on to this trade at that point. I'll take my $240 profit and be done with it. I won't swap the 360s. I won't swap the 366s. And the reason is because we're past the profit zone. I don't want to extend this trade anymore, because if we do start to move up, then I could potentially start to take a small loss on that trade. All right. So this is one of those where it holds its value. It's not like the Friday Mondays. It holds its value because these longs are a full week apart. Remember how we talk about the dead zone, and we're like, if you're on Friday, Monday, and this is the graph that you see, you're gonna have to stress test it. Well, due to the fact that it's a full week away, you don't see the volatility drop the same way on the expiration day, and so this is a very accurate graph with this. And it gives you that opportunity again to sell stuff. All right, so let's say we're trading at the first short strike, which right now would be 367, right? Is that where we're trading? 367-ish. So the first short strike is at 367. This thing's trading at a debit of 160. Okay, debit of 160 right now. So I have almost $200. There's still 27 cents on this, but guess what I would do? What would you do on this one? I would sell the 1216 367s. And right now you could sell the, if I can, let's do this. 1 second. All right, so we're trading at 366.43. What can we do the 1216 367s for? $2.62. $2 or that's 1221, sorry. 1218, we need to do 1216. Righty. So 1216s we can sell for $1.90. $1.90. That reduces the net risk by $1.90, and the max risk is just under $400. So by getting up to this point and selling a 1216 367 for $1.90, we've just lowered the risk by almost half, and we've increased our profit potential by $1.90. The 379, so the 6 points above that be the 373. And if we wanted to replace the 379s, we could do those for another 20 cents. Or you could just go ahead and do 1218s. You don't have to do Wednesday. You can go ahead and sell Fridays if you want, and you'd be able to bring in another 45 cents on those calendars, which per, and so that'd be another $1 on the calendars. So you're just creating this massive, nice profit zone by bringing in more premium if the market moves up to that level. I absolutely love the cash flow approach because it gives you so many options. You don't have to worry about the massive drop in volatility, and the risk is still limited on this type of deal, still limited, but you have a pretty solid profit zone here that you can go through. And by the way, if you go to 375, just one last idea. If you go to 375, that puts the 373s in the money, and you can get out of the 373s, let's say for $2, and then turn around and sell the 375s for maybe $2, maybe not quite $2 on this, and you actually move that short strike up, which actually reduces your risk even more. And we'll put all these. I'm gonna go through various sequences of risk zone, how this increases the risk zone. Right. So if you can't do, let's say, option insanity right now, and you want to try something like this, where you're actually using cash flow, the cash flow approach, which is where you sell multiple sells against one single long, multiple shorts against one single long. It is definitely something that you can grow fairly quickly on a small account because you can use the very, very aggressive compounding. Okay. All right. So there's more that I had planned. I apologize for the issues. I'll have to figure out how to prevent that in the future. Maybe I should just save my patterns, and then I wouldn't have that problem when I put them together. All right, let's go ahead and take a look at any Q&As. Wow, and my Q&A session is not showing. So, there it is. All right, let's take a look at the questions. Can you please remind more or less the dynamics of ex-dividend week? When do you run most risk of being assigned? How is the profit impacted? So the overall risk, there is no additional risk to being assigned, technically, all right? The risk that is occurred, if you're assigned on ex-dividend, what's going to happen is you're going to be assigned, and then if the market the next day drops tremendously, you're actually going to have more profit potential. So if you get assigned in the money call, then you have more profit potential at that point. Okay, so technically that's the reality of it. Plus, you can turn around, get out of your assignment, and resell the call the next morning. So there's actually more profit potential. The issue comes with what your broker does with that assignment. And if your broker exits your assignment and does not tell you, they're not going to replace it. They're going to exit your assignment. They're not going to tell you, and you're going to have these naked longs. Now, the risk is limited to the value of the longs, but if the market then tanks, you're not going to have anything to offset the value of those longs. That's where the risk is. And so you just want to avoid it unless you absolutely know that your broker's not going to mess with your position. And then you need to know how to do it. And just make sure that you can, you either exit the shorts and the longs at the same time, the short position, stock position, and the longs at the same time, or exit short and resell the call if you can bring in any premium for it on Friday morning. All right, let's see here. For 24th, 31st, and Monday, Thursday, spread would behave similar to Friday, Monday, or should I forget these 2 weeks? No, the Monday, Thursday is not going to perform similar to the Friday, Monday, but it's not going to be as good as a Monday, Friday. Does ex-dividend still matter if you're expiring shorts are way out of the money? No, Mark, it does not. Ex-dividend has absolutely zero effect on you if your calls are out of the money. And in fact, even if your calls are at the money, but the value is less than the dividend payout, you have a lower probability of being assigned. It's not absolute, but it's still lower. Let's see here. Yeah, so the crazy count. There's one thing that I wanted to go over today, and that is the price of the crazy calendars. I think I already stopped. I'm going to share my screen real quick, just really quick again. So bear with me. I know we're over, but I don't technically limit these to an hour. Let's see, I'm going to share my screen. And all right, so here, something that I wanted to go over a little bit more detail. Here is the 4-lot of and 5-lot of a crazy calendar value last week. So the crazy calendars are dropping. They're not as good. They're not bad, but they're not as good. I wanted to illustrate this. So you can see here that the 364 calendars last week ended at 89. This was the market. The market was trading around 366 on Friday, and the 364s ended at 89, 365s at 115, 366 at 150s. And so that was the peak here, 366. And then it started dropping fairly quickly to where the 4-point out of the money were only going for 27 cents. That's why I say you want to get these calendar spreads as low as possible right now. You don't want to pay very much for calendar spreads right now. Let's see, how far OTM would you go to hedge the 383 call? I would go as far as I needed to go in order to not pay anything. Yeah, obviously, if you're trying to squeeze this in a smaller account, it's going to be more difficult. But most of the time, you're going to want to have more than what the margin is required anyway. So it really doesn't matter how far up you go. Okay, because these are not to limit the risk. The closest you're going to get is like 20 points away from the short strike, and that means that the price has to go that much further before you limit the risk, and it's not going to do that in current market conditions. Let's see here. Do I always go 10 points away between spreads? No, Carl, you can actually, if you're willing to go a smaller credit, you can go 11 points away. Sometimes you can go 12 points away and just create this ridiculous, trade, but you're not going to get anything if the market stays the same or moves down, right? If you're going out of the money with that, but yeah, you can absolutely increase. So play around with that. That's, these are patterns. They're not absolutes. Doesn't mean that you can't do anything else different. You'll notice that I did the 2-to-1 where the strikes were only 5 points away. And so, yeah, you create those different aspects. What will Tesla being added to the SPY on 12/31 do? Bernard, quite honestly, I had this question before, and I realized that it's going to be a major market player in here. The volatility in SPY might increase a bit. That doesn't bother me at all. But I, honestly, I think the volatility in Tesla is going to start to drop a bit. I think it's going to have to even out. And so I think there's going to be this dual effect where on the one hand, the volatility of Tesla begins to drop. And on the other, it will increase the overall volatility, S&P 500, but it's not going to be by, it's not going to be equal to what people are saying that it could be. So I am not that concerned about the effects. I'm not changing anything that I'm doing. Certainly not changing anything that I'm doing. If anything, it's going to be good for our approaches because we'll be able to bring in bigger credits and the volatility might be a little bit harder to drop out of these Monday longs. But we'll see, So keep tuned with the calls and we'll address whatever developments occur. How much margin are you needing for these 1-5 spreads? Generally about 10 grand. So, when you grow your account to 25, 30, 40, $50,000, somewhere around there, you can start doing one of these. And just make sure. And again, it's not going to be a lot, but it will absolutely affect your overall money management in being able to increase like the trades that we're talking about today, the cash flow TPOs. Let's see. Hi, Ryan. I took a Monday, Wednesday W trade with longs 365, 369, and shorts 367 for a credit of 139. It looked like there was no part below zero line in the risk projection, but it is a debit of 230 to close. Now, how did this trade go so bad? So, are you talking about today, Monday, and in 2 days, Wednesday? So first of all, you need to be very, very careful with Monday, Wednesday option insanity trades. That's why you basically only see Friday, Monday option insanity trades from me. The benefit of option insanity is when we see the volatility drop, which we know occurs most on Friday. The Monday option volatility drops most on Friday, but you don't see that same thing. That same phenomenon, it does not exist on Wednesday's option on Monday. It doesn't happen that way. So you have to be very, very careful with those. Ruben, if you go out far enough, yes, it could be a 12K margin on that trade. So again, you're not going to want to do this without a bigger account anyway. The 5-to-1, you're not going to want to do without a bigger account. You can do the 2-to-1 with a margin of like 3,000 to 4,000. So, again, it's just something to add a little bit of money into the whole process of the money management scheme. All right, thank you. Oh, glad you Glad you enjoyed the webinar, Nuno. Trade partner spread position tracker is sweet, but the one drawback, if I manually exit part of the spread, it doesn't pick up the fact that the leg of the spread is reduced or gone. Yes, John, that is correct. There, we are making many changes to the spread positions to increase the flexibility, both to manually enter, to create a spread if you legged in. So most of my spreads I leg in, and so most of them aren't showing on the spread positions. And so they are making some changes to that. They were also making some changes to the exits. You'll notice that the spread exits are gone after the day of the exit. That's a no-no. So they're going to keep a list of those. And you're going to also be able to add spread closes by legging in or putting together the spreads manually, and then it will keep track of that. There are people who actually do rebalancing trades, cause funds have to unwind tons and lots to come within parameters. Most of it happens near the open. The close, there will be lots of volatility at the open and the close. I would stay away from balancing positions at the open and close. Okay, I didn't see a question there. That's more of a comment. Let's see. Yesterday, Monday. Yeah, so you've got a situation where volatility does not come out of Wednesday options on Monday the way it does Monday options on Friday. You are welcome, Carl. All right. Any other questions? Yeah, I really wanted to get into a couple of risk-free calendars today because the 1223, 1224 calendars are been really easy. The following week, you're going to be able to do the 1230, 1231. Those are easy ones to put together because they're so close. I will make sure that we touch on that. Well, you know what, Thursday, we're obviously spending a whole hour on Thursday morning. So if you haven't registered for that, make sure you register. And that's when I'll deal with the risk-free calendars. All right, looks like I got all the questions. Again, I apologize for the technical issues that kind of slowed things down today. We'll get them worked out to where those don't happen again and move on from there. All right, everyone. Let's see. Due to the present crashing, due to lack of memory. Sam, you know what? Honestly, I think it's due to lack of memory. I think you may have hit something there because it's one where I had the thing put together and I didn't think about the memory because most of everything is on Google anymore. So you may be right. All righty. Looks like I got everything. Everyone have a wonderful day and weekend. I will see you on Monday. Thursday. I can't. I've got my days screwed up. I will see you on Thursday. All right, everyone. Take care.